Thanks, Karts. Yeah, I have done a bit of social media, and unfortunately, it's a big part of our industry now. And I had to learn that from my little brother, and now it's become a big part of the way we promote. So, I just want to thank Paydirt. What a great conference. It's come a long way in the last sort of 3 or 4 years when we started looking at nickel. And yeah, just you're great to see such a focus on what is a really important metal. So you can see there we've got the previously operating Bandfulk nickel mine. There's a existing concentrator, 450,000 tonnes per annum. It operated between 2013 and 2016. And the nickel price, when they put it in care and maintenance, was around $8,000 per tonne, so much lower than today's levels. What we're going to do differently, and this is why we're calling ourselves the Nickel Disruptors, we're not just going to produce concentrate like a lot of our junior peers. We're actually going to produce the first stage of the lithium-ion battery, which is the nickel precursor, NCM 811. So it's a nickel, cobalt, manganese mixture, chemical mixture in the ratio of 811 is the final product that we're looking to produce from our project in northern Vietnam. So the other benefit of this region is we've got some of the largest hydroelectric power plants in Southeast Asia. So we're well positioned with abundant renewable power. We see a globally relevant nickel sulfide district, and we've drilled that out over the last 3 years. We are looking at that precursor product, and the reason we're doing that is we went into South Korea very early asking the customers what they needed, and it was very quickly we realised that they can't do anything with your nickel concentrate. So you need to get it into a downstream product. You need it into a chemical product, and that's why we've built our business around that partnership model. And we've worked a lot of, done a lot of work in South Korea with the downstream partners. So you can see here, we've got 2 parts of the project. So you've got the upstream project, which is your conventional nickel mine where you produce nickel concentrate, and then we'll sell that to our other subsidiary, which will be our refining business. And that's where we'll produce that 811 product. The refining business is where we're looking to bring in downstream partners to bring the technology to produce that 811 product, but also the funding as well. So there's some big funding hurdles here, and that's where we're looking to bring in downstream partners in that downstream refining business. So the upstream, we own 90%. So we have a local Vietnamese partner that owns 10%, and that's an important part of operating in Asia, is having those strong local partnerships. So the upstream level, we've got the DFS underway. We've delivered a maiden resource and reserve there. So we're looking at around 485,000 tonnes of nickel. I've also got the byproduct credits in copper, cobalt, and the full PGE suite, including rhodium and some of the more exotic platinum group metals. So at the upstream level, we're looking at a large-scale open pit, low strip ratio, very similar sort of grade to Mount Keith. It's a large-scale disseminated bulk open pit, and then we've also got a number of high-grade massive sulfide underground opportunities as well. The downstream, also the DFS is underway. We're doing a pilot plant at ALS in Balcatta, and that's going very well. So we're looking to produce greater than around 40,000 tonnes per annum of nickel from the downstream business, and 50% of the feed will come from our upstream business, and 50% will come from third-party feed providers. So we see an opportunity for Australian nickel concentrates to be fed into our refinery, and 50% of our feedstock will come from areas like Australia and Canada and other regions around the world. And this is why we've taken some interest in other nickel developers, and the plan is we'll work with them to, at one stage, we'll hopefully bring some of their nickel concentrate or their nickel products into our refining. Yeah, a lot of people don't realise that Vietnam is a great place to operate. A lot of government incentives for foreign direct investment, very low tax incentives in the early years of the project. So you can see foreign direct investment over the last 20 years has gone from 1.3 billion in 2000 to 15 billion in 2020. So what we're seeing is a lot of interest, particularly out of South Korea and Japan, for investing into particularly in the manufacturing industry in Vietnam. And the benefits are the very competitive labour costs, so it's actually half of the cost of operating in China, and that low power cost that comes from those renewable power sources. The other benefit is we've got a brownfield project, so we're leveraging off all that great work from the previous owners. This was built and operated by Australian mining engineers and metallurgists, and they've done an amazing job at setting this up over the last 10, 20 years, and we can come in there and leverage off those strong relationships with the local government and the local people, and so that's a real benefit of having that existing brownfields project there. So this is where we're located. We're in the northern Vietnam region, so we're west of Hanoi, and you can see the two large hydropower plants at Son La and Hoa Binh. They are two of the largest in Southeast Asia. So we've got abundant renewable power, and then down at the port city of Hai Phong is where Vinfast is located. So Vinfast is a local Vietnamese electric vehicle company, and they are Vietnam's answer to Tesla. So very well positioned with what we believe will be one of the better, I suppose, startup electric vehicle companies in the world. And you can see those low tax rates. So the first few years, 0% tax, then you're moving up to 5%, and the ultimate tax rate's 20%. So you can see that the government of Vietnam is really incentivising foreign direct investment. So just on Vinfast, so the Vingroup is Vietnam's largest conglomerate. The combined market cap of all of their companies is around $32 billion. They employ 42,000 people in Vietnam and 1.5% of the GDP. So we're working with one of the major players in Vietnam, but we believe this will be a major player in the world EV space. The reason we believe that is a lot of the startups don't have that legacy issues around, I suppose, that movement towards EVs. Vinfast just said, we're all in EVs. They're going 100% EVs. And you can see that they've got a world-class factory in Hai Phong. They're also looking to build a $4 billion car factory in North Carolina as well. So they're going all in on electric vehicles. They've also started a battery division as well. So 12 months ago, they said we're going to build batteries, and 12 months later, they're commissioning a battery plant. So this is very similar to what we see in, say, China, where when the Vietnamese want to do something, they just get on with it, and it's great to have them as our partner. We're the only company in the conference today that can actually use the term green nickel, because we've actually got it trademarked. So what we believe is green nickel. Our focus really is we think sulfide nickel is the right way to produce nickel. We like the vertically integrated nature, so minimising transport of intermediate products. Obviously, renewable power. We like the pressure oxidation or the hydromet flow sheet, because that much lower emissions than the traditional stainless steel path. And we're also looking at a fully electric mining fleet. So we're actually, in our pre-feasibility study, studied a full electric mining fleet. We're in the Electric Mine Consortium. So we're very committed to ESG and ultimately a green nickel product. Everyone's seen the charts. I think the interesting thing about this chart is you can see that recycling will play an important role around 2030. But even with the recycling, there's still not going to be enough supply for the demand that's coming from the electric vehicle industry. We recently completed a life cycle analysis. We used a company called Minviro. They also have done a life cycle analysis for Tesla. So we believe they're the world leaders in counting carbon or greenhouse gas emissions through your project. And you can see there we've got a 9.8 kilograms of CO2 per kilogram of NCM 811, and it puts us well below our Australian peers and obviously well below our Indonesian peers. So you can see Indonesian HPAL is about twice as carbon intensive, and then the Indonesian nickel matte to sulfate route is obviously not going to really cut it for your OEMs. So just on our district, so we've got what we believe will be a world-class nickel sulfide district. We're still continuing to drill all of the different ore bodies. We have the large-scale Banfuk disseminated, and then we have a number of these high-grade massive sulfides. So you can see some really strong byproduct credits as well in the copper, cobalt, and the PGEs. We're working in collaboration with the Vietnam government to look at new areas. We're working on a new target called Chim Van, and we're continuing to drill that out. So continuing to explore what we think will be a nickel sulfide district. We've got around 10 years already. We think that over time we can push that out to maybe 20 years. There's plenty of opportunities there to find more nickel. So here's some shots of our pilot plant phase. So what we've done is we've gone into the existing underground mine. We've taken a bulk sample of that large disseminated ore body. We've done a cross-cut across that ore body. We've turned on the existing concentrator. We're producing concentrate. We've sent that to the ALS laboratories in Perth. And that's where we're producing those downstream precursor products. So you can see the autoclave there in ALS. I am sorry that it's taken a long time and the rest of the industry is sort of waiting for us to finish that program. We hopefully will finish in the next month or so, and then we'll hand it on to whoever's next. But unfortunately, ALS is the premier, I suppose, laboratory, and we're very happy that we were first in, and unfortunately it's taken a little bit longer than we'd hoped, but getting some great results out of that pilot plant phase in Balcatta. So just in summary, what we're trying to achieve here, we've got the Tarkwa mine and nickel sulfide district, where we'll feed the large-scale disseminated open pit mine and our small-scale high-grade massive sulfide mines. We'll also continue exploring. And at the refinery level, that's where we're looking to bring in third-party feed as well as our feed from our mine. So we'll look at third-party concentrates. We can also look at different products, including MHPs, nickel mats, black mass as well. So we can also look at the recycled products. We continue to look at M&A, and so we see an opportunity. There's so much demand on the other side. It's all about looking for more supply for our refinery. Our partners in the downstream, they're basically saying, how big can you build this? And so it's about supply and locking in offtakes with supply feedstock partners. So working with groups like Trafigura and the traders, but also working with other nickel miners. So if anyone wants to have a chat and wants somewhere to send their concentrate, you can either come to the booth and we can talk, or you can go and get, I suppose, go to a major or trader and see how that turns out. So just on our ESG positioning, the other benefit of having a strong ESG focus is it actually drives lower operating costs. So you can see we're going to sit right on that sort of margin between first and second quartile. And so we think that by focusing on those ESG credentials, we're actually driving our operating costs lower. And we can see we're going to be one of the lowest cost nickel, I suppose, operators to get into that nickel sulfate or downstream products. We have the opportunity to even take our LCA or our greenhouse gas emissions even lower by doing a power purchase agreement directly with those hydro power plants as well. And we're looking at other opportunities to really drive that carbon footprint down to a net zero carbon opportunity. One of the real benefits of our refinery is the fact that we can purchase nickel concentrate at a discount to the LME price, and then we sell it at the NCM 811, which sells at a significant premium, up to 40% premium to the LME nickel price. We can take nickel concentrates that may not be suited for the smelting stainless steel industry. That's a real benefit of our downstream process. So just in summary, for the next 12 months, it's a big year for us. It's really about completing the pilot plants, the definitive feasibility studies, really locking in our partners, and that's at a downstream partnership level, but also our feedstock partners, then working through with our debt providers. We're working with the Korean Development Bank and Bernva looking at a final investment decision, but also most importantly, locking in that third-party feed offtakes as well. So it's a big year. Looking forward to coming back next year and achieving all of that. So thank you for your time.